Hey, Adam Hoeksema here from ProjectionHub, and in this video, I'm going to be walking you through how to acquire a UPS store with an SBA loan. This is from a real-life example. So we helped a client go through the process of creating projections, a business plan, and going through the SBA process to acquire this existing UPS store. And I'm going to anonymize the particular store and the buyer and seller and whatnot, but show you kind of the process. So the first kind of step that we went through was just determining how much of an SBA loan could this store even qualify for. I'll show you kind of how we go through the process of finding a lender, and then ultimately through the underwriting process, creating projections in a business plan that'll meet underwriting standards, and then ultimately getting that final approval and getting to the closing finish line. That's the process here. My background, I was an SBA lender for 12 years, closed about 1,500 SBA loans, and now I own ProjectionHub, where we help folks create projections, business plans, and walk through the SBA process. So with that, I'm going to go ahead and dive into kind of the first step is taking this acquisition projection template that we have here and just determining and calculating how much could this existing store actually cash flow and how much of a loan could it qualify for. So with that, let's go ahead and dive into how this works. So I've got pulled up our acquisition projection template. We'll put a link in the description of the video below to this template so you can use it for your own acquisition. But I'm going to be focusing here on this historic data input tab to start with. So the first step here is we are taking the seller's historical tax returns here and getting that into the model. So we're taking the revenue and expenses from the historical tax returns because that's what the SBA lender, the underwriter, is going to do. The tax return is kind of the source of truth, and that's what they use to determine how much could this business cash flow in an SBA loan. And that really will determine your limit of how much is possible to borrow. Okay, so that was the first step. We get all of the revenue and the expenses into the model here. And when you first look at the net income, you say, oh, wow, there's not really any profit here. But the way this particular seller was operating is they were kind of adjusting their compensation of officers, the compensation of the seller, through salary. They were adjusting that to basically pay themselves a salary for the entire amount of the profit of the business. So they're basically looking to show a break even each year and then just pay out in salaries, whatever they needed to in order to hit break even. So you'll see up here, compensation of officers on the tax return expense here was $192,022, and then kind of decreasing here, right? So when you add that back, along with a few other different add backs here, like some employee insurance expenses here, you get to a seller's discretionary earnings. And this is ultimately what the buyer has available as cash flow to be able to make payments on debt. And so you can see, again, there's kind of a concerning trend here, right? It went in half from 200,000 to 100,000, basically over that 3-year period. And so what we looked at is we said, okay, well, what's the proposed sales price? So the proposed sales price we had over here was 400,000. So just 400,000. And we assumed a 10% interest rate on a 10-year term. And then we also assumed that the buyer was going to put in $125,000 of equity to cover closing costs and provide working capital as well. Okay, so with that $400,000 loan over a 10-year term at 10%, the annual loan payments on that loan would be $63,432. So that's what we're calculating right here, the proposed annual debt service. And then we're taking the cash flow here, dividing by the proposed annual debt service. And so what this 3.21 is saying is that we have $3.21 of earnings here for every dollar of debt service. So that's a great place to be. You've got plenty of cash flow to cover your debt payments. But we can see this concerning trend, right? And so what a lender is going to want is to make sure that the debt service coverage ratio is 1.25 or above. That kind of sets the limit of how much you might be able to borrow. So in this case, it was at 1.72, but because there was this pretty concerning downtrend, there's probably some extra wiggle room that the lender's going to want to have here. So even though some lenders, if the roles were reversed and this was a growing and profitable business, hitting that 1.25 kind of right on the nose would probably be okay. But because it's in a downtrend, you need more wiggle room probably there. Now, there was a good explanation in this case of why the profitability had been going down, or the seller's discretionary earnings had been going down. It was because the owner had some health issues and was really absent from the business. And so the business was declining because of that. So the new buyer coming in could make a really good case and put this together in a business plan and projections to say, hey, we're going to turn this around because I'm going to be present in the business, it will be active, and we'll grow the business again. So that's kind of the first thing that you're looking at, though. So if just as an example, if we said, hey, the seller wanted $600,000. So if we said the price was going to be $600,000, and we look at what our proposed debt service coverage ratio would be here, it'd be 1.15. So that's below the 1.25. It's on a downtrend. Like, that would not get approved, okay, by most SBA lenders. It's highly unlikely that $600,000 would get approved, but the $400,000 was able to get approved in this case. All right, so next I want to kind of talk through how to find a good lender fit for you. So we have put together a tool we call our SBA Lender Finder tool. Okay, so if we just come to this tool as a starting point, it is going to show you all the publicly available SBA loan data for the last 5 years that the SBA publishes. We got it into this dashboard, and we're going to put a link in the description of the video below so that you can access this tool for free and kind of sort and filter and find a good lender for you. Now, one thing you'll notice right at the top here, the UPS store is the top, by far, franchise in terms of getting SBA loans. So over that time period, 906 SBA loans for UPS stores. So the first thing we're going to do to filter is we're going to filter by state. So let's just filter for New York. We're going to look in the state of New York, and so we're going to see, okay, UPS store is still at the top of the list here in terms of franchises. Here's the top lenders in the state of New York who have done the most SBA loans. And this is just across all types of SBA loans. So TD Bank, M&T Bank, JP Morgan, BayFirst. Now let's select change of ownership for the business age. So change of ownership is going to mean it's an acquisition because the loan is going towards the change of ownership or the acquisition of the business. Okay, now we see that Manufacturers and Traders Trust Company is the top of the list here. Live Oak Banking Company, they are known as top acquisition SBA lender across the country typically. So they're up towards the top of the list. And you can see the UPS store here with 5 acquisition loans over that time period in the state of New York. And so the nice thing about this tool is you can sort and filter by your particular location, your state, and the whether it's an acquisition loan or not, and see a list of lenders. Now, that's great. It gives you a starting point, but we don't have a name. We don't know a person at every single one of these banks in every single state, right? And so that is a bit of a challenge here, and a limitation of the tool is that you need to really talk to a real person, a lender that can help you through the process. And so this gives you a starting point of where to look, but you also would probably benefit from having a connection with a real lender. So we do offer, you can see, need an intro to a lender, get help. We offer this free SBA review form here. So you can fill out and give me a little bit more context about your deal. And what I can do is I will do a little bit of digging on my own then on your specific situation with our tool here, but also based on just lenders that I've worked with and know, and say, hey, I know this lender likes these types of deals. And I can actually give you a connection with a real human SBA lender and try to help you through that process a little bit more. So that free SBA review, feel free to fill that out, and I will give you some individualized feedback and try to help. Okay, so once you've found a lender, in my opinion, it'd be a good idea to do this as early in the process as you can, maybe even before you found the particular business you want to buy. Have the conversation with lenders early. But once you found a lender, there's kind of 2 steps that could happen in either order, but you need to get a term sheet from the lender, and then you need to get under LOI. They'll say, get under LOI, or get the business on contract with the seller. So basically you're getting the seller to agree to sell the business to you with your kind of LOI or your letter of intent. Now, there could be some different opinions. I kind of go back and forth on what you should do first. I've had situations where people make an offer with a letter of intent and they haven't talked to a lender yet. They make an offer and then they talk to a lender and the lender says, oh, why'd you offer that? We'd never approve that. So then you have to go back and renegotiate. So that's not ideal. At the same time, I've had situations where clients have gone to the lender first, trying to get a term sheet from a lender that lays out, hey, we've reviewed the deal. Here's how much we think we could lend to you. And in the process of getting that term sheet, some other buyer came in and swooped up the deal. So you need to make a decision on what you want to do there. But I think, probably getting the deal under LOI probably makes sense, especially UPS stores are pretty competitive. They're attractive to buyers. And so I would probably say try to get an agreement with the seller in place and then go to a lender and try to get a term sheet. You need to ask the lender for a term sheet. And what that does is they're going to lay out their terms so there's no surprises. They've reviewed your deal. So they've reviewed the financials from the seller. They've reviewed your personal tax returns, your credit score, your personal financial statement, your resume and experience. And based on that, they're saying, yep, we think we can lend X dollars at this rate and term, and here's how we structure the deal, and here's what we would need as collateral. They're going to do all of that for you. And they should issue that term sheet before you go into a full underwriting process. Okay, so once you have the term sheet and the deal under LOI with the seller, you're going to need to get ready for underwriting. And as part of that, you're going to need to create a full set of projections and a business plan. And so going back to that spreadsheet we had here, so I showed you kind of the first couple tabs here, but there are several more tabs. And what you're going to need to do is not only get the historical financials of the seller into the model, you need to project going forward. What is it going to look like once you take over? So in this example, we just said, hey, we're just going to keep things the same. We're going to try to steady the ship. We're going to increase revenue by 3% a year. And we're going to add a new printing line here because the seller hadn't been doing that. And we think we're going to add a little bit of income from that as well. And then on the expense side, we go through kind of line by line and say, okay, in this situation, this particular buyer had some outside income. So they did not need to take a large salary from the business. So the owner had taken, in the prior fiscal year, $95,000 in compensation. Well, the new buyer said, hey, I only need 30 grand. I've got outside income. I've got all my bills covered from the outside income. I just pay me kind of 30 grand initially. That's what I need, or I should take as for my effort here. And so they built that into the assumptions. They, for the most part, these expenses like the cost of goods sold historically had been 36.26% of revenue. And they said, hey, let's just assume it stays the same. And you kind of go through and do that with each individual expense, right? How's it going to change? Is it going to stay the same? If it is going to change, why? And what is going to change about it? And ultimately, that gets you to your projections here. Now, we can actually see here this debt service coverage ratio. Because I had changed it to a $600,000 loan, our debt service coverage ratio is 0.98, 0.93. So this doesn't cash flow, which is why we need to go back to that $400,000 loan, which is what actually got approved. And now when we look at that, okay, our debt service coverage ratio projected is 1.46, so it's above that 1.25 that we need. And then this produces a 5-year income statement, a 5-year cash flow statement, 5-year balance sheet, and then the income statement, cash flow, and balance sheet broken down by month for each of the 5 years, which is what you're going to need to be able to provide to your SBA lender. And you're going to need a business plan as well. And so we're going to put a link to both the acquisition projection template in the description, as well as this free acquisition business plan. We'll put a link in the description of the video as well. So you can grab this. This is just an example of kind of what you would need to put into a business plan for an acquisition. Now, there's a lot here. There's like 34 pages. Depending on how complicated the business is that you're acquiring, that's going to determine how much you need to do in terms of writing in the business plan. In this case, for a UPS store, probably relatively straightforward. It's a franchise. It's a well-known franchise. I'd say the main thing that you're trying to do in an acquisition business plan for a UPS store that's already been operating and working, you are trying to convince the lender that you are competent enough, you have enough experience and competency not to screw it up. Like, it's already working. There's UPS stores all around the country that are working. Like, let's just make sure that I'm going to get in there. Here's my plan to transition it. Here's my plan to, if I am going to make changes, what changes am I going to make? And how am I going to make sure that I don't screw up a thing that's already working? That is the main goal, in my opinion. And so you can write that probably in 10 pages, not 30 pages. But for more complicated acquisitions, having more detail could be helpful. Okay, so once you have your projections, business plan, and all the rest of your package that you've already gotten to the lender during the process of getting a term sheet, now you're ready to go into underwriting. That's where the underwriters are going to beat you up with some more questions, really dig into your numbers and your plan. And if you get out to the other side of that and get an official approval, you're not quite done yet because you still have to go through the closing process. And with an acquisition, that includes getting an appraisal or evaluation. So for any SBA loan, the lender is required to order an appraisal of the business. So if that appraisal were to come back, like let's say you had agreed upon a $600,000 purchase price, and maybe the bank agreed to that for whatever reason, even though it doesn't cash flow. Let's say it didn't cash flow, but the bank agreed to it for various reasons. Maybe because you had a bunch of extra collateral or a bunch of other income from other businesses or whatnot. If the appraisal comes back and says, hey, this business is only worth $400,000, the lender is going to have to reduce their loan amount to be no more than that appraised value. And so that is kind of one last hurdle or step here. And it's kind of helpful and reassuring in some sense that you're not, as a buyer, you're not going to like way overpay for a business most likely, because it has to pass the lender agreeing to lend that much, and it has to pass this appraisal process as well. So you have some guardrails to make sure you're not way overpaying for a business. Okay, so once you get through that, then you're kind of just at that final stage of you got to get the lawyers are all involved, the bank's lawyers, the seller's lawyers, the buyer's lawyers. And then also in this case, and this was a pretty significant delay in this particular case, was that the franchise, there's a process, since it's a franchise, transferring that kind of franchise ownership of the store from seller to buyer, and the franchise, it's in the franchise's hands. They can take their sweet time, and in some cases they do take a lot of time. And so that is another piece that has to get done kind of post that final approval from the bank, but prior to closing. So that is the process. There's quite a bit there. It is not for the faint of heart, but it's doable. And, I like to say that, if you can't make it through the SBA loan application process, which is hard, there's a lot to it. There's a lot of details, but if you can't make it through it, then, owning a business is hard too. You might actually have it might be a good test to determine, do I have what it takes to own this business? If I can't make it through the SBA process, am I going to be able to handle it when challenges arise in the business? So, you might watch this and be like, man, that is a lot. Is it even worth it? Owning a business is a lot. And so I think it's worth it. I think going through the SBA process is tough, but it's worth it. And if you need any help along the way, there are lots of people, lots of folks like us that are happy to help you through that process. So feel free to reach out to us at support@ProjectionHub.com. I've mentioned a whole bunch of resources along through the video. So free business plan template, our free SBA review, the free SBA lender finder tool, the acquisition projection template. We'll put links to all of those in the description. And if you need any specific help, you can always reach out to us via email at support@ProjectionHub.com. If you thought this video was helpful, I'd love it if you subscribe to our channel. We produce a lot of content on SBA and acquiring businesses and starting businesses, so we'd love to have you. And like the video and give us some feedback in the comments if you thought it was helpful. All right, thanks.